Good evening, everyone. My name is Paul Young. I'm actually going to do a quick video. It won't be more than 5 minutes because it'll just highlight the big key aspects that come up quite a bit in terms of discussion around corporate taxation and cash investments. So basically what I did is I went to Stats Canada. Stats Canada reports annually capital expenditure, maintenance reports, and stuff like that. So basically CapEx reporting. And I looked at the trends just for the last 4 years just to kind of get an idea of what's going on. So you'll see in 2012 the private sector capital spending was about 174 billion. In 2013 it was 183, 2014 184, and 2015 172. Now the big drop between 2014 and 2015 is the oil sector. Capital expenditures are down about 25% in the oil patch due to falling oil prices and just scale back of capital projects in general there. Now, I also then looked at the corporation tax that the government collects. Now, I didn't go into any other aspects of EI or CPP payments. This is direct corporate taxation rate that comes off as part of the calculation of net profit. And basically what I did is the rate itself has been consistent since about 2010. It's come down from where it was about 19% when Stephen Harper was in a minority government to where it is now, which is 15%. And then what I did is basically the assumption is I'll just use a 15% on that corporate tax. It'll be a mix because there's likely some small business in there, but for my analysis it serves its purpose in terms of what I'm trying to accomplish here. So I came up with my estimated corporate profits are for the year, which are in billions here, which is 224, 233, 244, and 266. So it's been growing each year, which kind of stems to what's happening with the economy and everything else. Since over the past few years it's been a bit stronger, there's more corporate profits, there's more investment. Now here's what I basically did, is I basically made some assumptions here, and basically I'm just looking at saying that capital spending as a percentage of profits. So the only way companies move money around is if they're subsidiary companies, they'll flow that money through dividends, and that shows up through as balance as trade payments. That's an outflow. So in particular cases, some of this money actually would likely have flowed out through as dividends, but you're seeing consistently that companies are putting money back into the business. So despite what the opposition says that they're hoarding all this $700 million cash, that's not likely happening to the extent that that's being statement. That's a high level number. You have to peel that number away, and that's what I'll get into the next slide. The next slide basically talks about cash investment. Yes, this is a US slide, but in general, cash investments, the sum of money sitting on the balance sheet in marketable securities or other short-term investments, typically are residing with very, very few companies, and most of those companies are high-tech companies. Now, you'll hear a lot of spinning about this, companies sitting on dead cash, but when you peel it away and you start looking at the industries, most of them are high tech, most of them are in the electronics area, like telephone companies, telecom. That's where you're seeing it, because those type of things are heavy in R&D and basically use a lot of money floating around in terms of their margins. So you don't hear that statement for a reason, because the Liberal Party and the NDP can't run on that. So they basically try to take high-level numbers to try to smear or pander for votes so that people won't go into the details. So this is one of the reasons why I wanted to illustrate this. The next point I wanted to bring up is the CISCO deal. The reason I'm bringing up the CISCO deal is the NDP potential finance minister, which is Andrew Thomson, he actually used to work for CISCO. Now, the reason why I brought that up is the Ontario government struck a deal which they're giving them $220 million as part of this whole area to help develop high-tech R&D here in Ontario. But realistically, CISCO is one of those companies that has a lot of cash sitting on their balance sheet. So what they're doing is they're using tax rates to move money around. Since Ontario tax rates are pretty low comparative to other jurisdictions between the Canadian and the federal rate, what the company's saying here is we'll populate some of this cash through here because it's a lower tax rate than the US. This is, when you get into this whole taxation planning, it is not a simple fix. As much as you hear Mulcair and Trudeau talk about, there's a lot of work that goes in taxation, especially when you're dealing with multinationals, in terms of how they move things around. Now, The solution that they want to talk about is they should have been talking about the OECD, which wants to look at tax avoidance to try to stop that gap of moving transfer pricing around. But not one time has Mulcair or Trudeau supported the OECD reports, because they don't know enough about taxation. Because that means going into details. That would mean trying to discuss something that's beyond the scope. Mulcair is not a tax person. Trudeau is not a tax person. But they're good at pandering fear. And that's what I wanted to try to illustrate with this presentation.